Welcome to another chat with a CSE financial expert. Today we're with Julie G, who is kind of a little bit of an all things educational expert. So we'll just hop right into it. Today, Julie, we're going to talk about credit scores and really why people should care about their credit and their credit score. So real quickly, for those who might not know, can you explain briefly what a credit score is?
A credit score is a 3-digit number that is actually based on how you borrow and how you actually pay back your debts. You can leverage that combination in gaining a great credit score. So an A credit score would be high in the 680s to the 7 or 800s. The lower score would be around 350, and you may be rejected from even borrowing, and that can hurt any kind of ability of borrowing going forward. So you really want to play the game to your advantage, because it doesn't hurt your creditors, it hurts you in being able to be successful in this credit scenario.
Perfect. Oftentimes a lot of people will hear credit and credit scores and everything that goes into credit and think that it's some difficult math equation that is impossible to figure out. Really, there's only a couple things that go into a credit score. Can you talk about those?
That's a great question, and you can make it so simple by thinking about a recipe. Many of us have baked or cooked over our lifetime, and easy directions can be found online. So if you take, for example, a cheesecake, let's think about a cheesecake and let's picture that as your credits. The cheesecake is broken into 5 sections that build your credit score. So the first large section is going to be your repayment history. That's 35% of that piece of cheesecake. In order to be successful with your credit score, you want to pay your bills. The next section is 30%. That's a measure of your score, and 30% is based on capacity. That has to do with your credit cards or your open end, something that you can borrow and pay back, borrow and pay back. You use that to your advantage, and that's 30% of your score. 15% of your pie, or your credit score, is the length of your credit. How long have you had something? So I started my credit journey at age 18. Now I'm older, but 15% of my credit score is based on how long I've had a certain amount of credit reporting to the credit bureau. So the next section is mix of credit. That's 10% of that piece of pie. Do you have a mortgage loan? Do you have an auto loan? Do you have credit cards? Do you have personal loans? What is that mix? That's also 10% of your cheesecake or your credit score. And then the last section is how many new lines of credit or how many new types of credit have you opened in a short period of time. If you go to the mall and open a bunch of credit cards, that reflects negatively on your credit report. So you have to monitor how much of the new credit you open. So that's your whole piece of pie.
Well, thanks for the quick, easy to understand explanation of credit. We've got one more question for you.
Sure.
And really, after you piece that pie together, it's really important to monitor your credit, watch it regularly. Can you tell us how to do that and why that's important?
Yes, that's very important to monitor your credit. You want to make sure that no one is utilizing your social security number to your disadvantage, number one. Number two, you want to see how your creditors are reporting to the credit bureau. How many times have we made our payments, and are we sure that that creditor is receiving that payment? This is a way to watch and make sure that your credit is being reflected as your repayment. So go to annualcreditreport.com. That will give you the ingredients of your credit report. It will not give you your credit score. There would be an additional charge for that, but at least follow what's being reported to the credit bureau. Great question.
Well, thank you so much for your time, Julie.
Sure, Tim.
And for those of you watching, be sure to check back for more of these quick tip videos, and we will see you then. Thanks.
Thanks.